today.
The Bond Report is sponsored by PIMCO, the authority on bonds.
Back to Squawk. Yes, we have jobless claims in front of tomorrow's big report, and the survey in 3, 2, 1 now says that jobless claims last week reported at 529,000. Well, they revised slightly to 530. Then you knock that down because it's now down 21,000 to 509. Still not a pretty picture above 500. Continuing claims, these things are really moving up into worrisome territory from under 4 million to above 4 million, close to 4.09 million on an annualized basis. Now, we all know yesterday ADP wasn't pretty. It's not a question of accuracy. As the Professor Liesman says, he's right. It's all about the direction and tone of how that report may correlate to tomorrow's report. Hey, coming in, all these central banks eased, maybe a little more than anticipated. Their currency's taken a bit of a hit, but not huge. The dollar is higher. The big story continues to be the yen. As Brad was telling me, how brilliant were they? Where did they build their factories?
In the U.S.
And what's going on with their foreign exchange? Think about if they didn't have those factories here. Pre-opening equities, well, you know, they're down pretty big, and they aren't really phased too much by this initial jobless claim, even the small drop. Back to you guys.
Yeah, that's right, Rick. The big numbers tomorrow, and this one isn't in that number, but you would think you might have, the 500,000 losses that some people are talking about. It seems like you would have seen something reflected in this one would have been worse, no?
Yeah, and you know what? Everybody makes good points. The labor force is bigger and all of that. But at the end of the day, I still contend that jobs, hey, giving people 4.5% interest rates when they can't afford their house seems a little senseless. Don't charge them any interest at all. If you can't afford it, you can't afford it.
No. Liesman was just here, and once again, he thinks that you are so off base on
Of course he does. And all his off-base comments the last month and a half sure put us in a very nice spot. Don't you feel optimistic about where we are right now?
Rick, what he said was the government is only setting prices on things that normally would regulate themselves to more normal.
Right, and what's normal? What's normal? There's the harbinger.
Rick, I'll tell you what's normal, okay?
What's normal?
Rick, first of all...
You've never traded, Steve. You know what normal is? Normal is what the market is.
Rick, hold on. Rick, first of all, you need to discount what Joe Stir It Up
okay, I can do that. Let's do a rewind. Let's do one of our famous rewinds.
Again,
all right.
Okay, let's start again.
We're starting over.
All I was pointing out was I went back and I looked at the 10-year versus the 30-year mortgage over the last 15 or 16 years.
Yeah.
The average spread is 168 basis points, okay? Right. What is it right now, Rick?
No, let's rephrase it.
Answer the question.
First of all, I don't like your premise. Take out the last 6 years and what do you have?
I didn't do that, Rick, but I can do that for you. In any event, I got the chart. If you guys have it in the back there, you could roll it up. There we go. There's the mortgage spread.
See, Santelli?
If I take out the last 6 years, Rick, it's still bizarre. Okay, it's still ridiculous. So
you're right, Steve.
Joe, you're not helping anybody. You're not helping Rick, and you're not helping me. Okay. So, Rick, if I go back, it's 168 base points. If I were to do that right now and put that 168 on the 10-year, what do I got? I got a 10-year at 250. I'm going to add 150. I got about 4.25, right? Okay? So all the government would be doing by putting out a 4.5% or a bid on the 4%, which would create a 4.5% retail mortgage, would be doing what the market has typically done for itself. And just to pop your Ann Randy and this is a free market economy bubble, let me just point out to you that the government has provided tax incentives for home ownership for almost ever. So it's not exactly the free market you'd love it to be in any event.
No, but okay. I love your point that you're looking at market history to, in the future, usurp the market and make it a pegged rate by the government. Gee, that makes a whole lot of sense to me.
No, Rick, what I'm saying is that
you're saying, Steve, is that we ought to move to China if we want capitalism.
No. My point is that you keep arguing for the market to handle this thing, but I'm telling you, Rick, there is no market.
Oh, you know what? If there's no market that there's no market and people in Washington because they've got us into a mess and they want to unwind it as fast as possible.
Rick, are you saying to me that what's going on right now with the yields
that these leaders
that are out there are normal?
I didn't elect anybody to take the U.S. Treasury piggy bank that we elect people to protect for us and use it for their own personal ideas to how to fix something they don't understand.
They're going to borrow at 260 and they're going to lend it 4.5.
Let David Walker.
Why do they need to do that, Steve?
You don't. The federal government can't even manage itself.
They can't even deliver the mail.
But we clearly don't have efficient markets right now.
Right, so you got to let the markets work it out, because I'd rather have an aggregated opinion of the marketplace come out with what it tries to transparently price discover than somebody thinking they're smarter than all that and peg it.
Rick, when the market fails to function over periods
Why
of
it's failing to
hundreds of
function
years.
the way you think it ought to. Maybe it's right and you're wrong.
Okay, so that means that a perfectly credit-worthy
that means that if
customer.
people are insolvent and banks are insolvent, the market ought to penalize them.
No, Rick, because I got off the phone yesterday with a banker at one of the biggest banks in this country.
And he has nothing in the game. No flush in the game. And he's objective.
No, Rick, hold on. He told me that he told his lenders, he told his credit officers, do not offer loans. I don't care if they're credit-worthy or if they're not. Don't offer loans.
And I'll show you three other banks that are making loans.
No, I'm telling you, Rick, that when a
anecdotal evidence, I have more faith in you than that, Steve.
No, this is from a top banker with a big balance sheet.
Top banker, one of the big guys.
Who are you talking to, Rick?
One of the theys.
Who are you talking to, Rick?
I'm talking to the boards. I'm talking to the boards.
I'm telling you, when that happens and a credit-worthy customer cannot go out and get a loan to buy a house that he can afford, that the markets are not functioning.
That they ought to make my tax dollars and buy it down with points on my nickel, okay?
All right, Rick. That's fine. The markets are not functioning. I don't know what you're looking for.
Okay.
Maybe it's a dumb idea.
You don't like
Maybe
the way
it's a dumb idea.
So you want to change
it's a
the
dumb
rules
idea,
in the
Rick.
middle of the game.
Maybe it's a dumb idea.
You're not going to get elected anytime soon.
Things like this.
But you can't argue that it's functioning in the right way, Rick.
These guys are passionate, right?
You can't argue it's functioning right. If you got another solution,
you heard the bell.
Let me know.
You heard the bell, Rick.
There is a better solution. A card laid is a card played. Where's our frontier spirit? We're turning into a bunch of
I think that's a hit after the bell, Rick. I think that's a hit after the bell.
Okay, good. Let's check the thanks, Rick. When he does that,
when he turns away
around and walks away. Yeah, turns away
Penalty point.
Let's check the reaction at the CME Group in Chicago. Jim Urio, I think we're checking your reaction to the unemployment claims, Jim, or you can react to Rick and.
There's so much to pick from, really.
To Rick and Steve. I love that. That's not planned.
Who's right, Jim?
Who's right, Jim?
Well, it's Chicago versus New York. I think Rick's right. I think it's just delaying the inevitable when we do this. We have to look at the fact that we had a 25-year boom. There's no way we're going to stop this big bust. Everything they throw at it, nothing seems to stick so far. This seems like a nice idea. I just don't think it's really going to work. I think the market should get things.
Yeah.
And you say,
but if we're gonna slam into a brick wall, Jim, don't you want to at least have an airbag? If nothing else.
No, but I want to get it over with. We're slamming in the. I mean, what's